A short time ago, the U.S. military carried out massive precision strikes on the three key nuclear facilities in the Iranian regime, Fordow, Natanz, and Esfahan. Our objective was the destruction of Iran's nuclear enrichment capacity and a stop to the nuclear threat posed by the world's #1 state sponsor of terror. The strikes were a spectacular military success.
Here's an update from us here at thesteadytrader.com around these latest geopolitical tensions and developments that we've seen in the Middle East. Obviously, over this past weekend, the United States essentially bombed the nuclear facilities or capabilities, or at least in part, of Iran, and that has caused ripple effects. Interestingly enough, and this is why we are just now recording this and didn't want to sort of kind of shoot from the hip, if you will, on Sunday or even on Monday, because we really thought this needs some time to kind of see now, and we'll show you this on the charts here in just a second, is the equity market essentially once again shaking off any concerns. However, the bond market is to us telling us something very different, and that's really where we are right now, and I think that's not something I've heard people talk a lot about. So let's look at those charts here, but I think what's really interesting here is that the equity market is selling a different picture than the bond market, number one. And number two, I think what's really important is that this is probably not yet over. I would be very surprised if this is now a handshake and it's peace forever, but likely there will be more flare-ups. Maybe we've seen the worst, maybe we haven't. Really, that's hard to tell. But I think an investor should now be in a position, or a trader for that matter, should be open-minded as to the next outcome and not draw to too quick a conclusion. All right, let's move into the charts. And first of all, I wanted to show you that we are getting a momentum sell signal using our trender indicator in bond yield. So this is 2-year treasury yields. You can see they're going down. In fact, if you were to zoom out on this chart, you get the longer term picture, which looks like this. So this essentially to us indicates that 2-year bond yields could go lower. And the reason why anyone would care about this is because once they start moving lower sustainably, or for a while, that can be a huge trend following trade. So for those people trading futures, this is typically, a trade that can literally make a year or multiple years for that matter. Again, obviously only in hindsight we'll know whether this is going to last, but for right now, this does look like the bond market is telling us a very different picture. Basically, what I'm trying to tell you is that if bond yields go down, someone is buying bonds. So bond price goes up, which means bond yields go down, which is bond yield. So someone's is going to the safety of 2-year treasury yields, even though the equity market, which I'll show you here, is telling us a very different picture. So I'm going to quickly show you the S&P 500 here. This is through the lens of the futures market, but of course the S&P is the same, and we are and remain at this very key spot up here that I think ultimately, we're early to tell, but at this point we probably would have to say that, listen, it's going to break out higher. I don't know how long that'll last, but it's just a really, really key spot here to respect. The other point I wanted to quickly make is oil. We talked about this last week a lot. This is the month-to-date chart of the sectors of the S&P 500, and you can see the energy sector, which had a huge outperformance going into the end of last week. Of course, then after the initial reaction on this past Monday after the bombings, is now down right back in line with technology stocks. So oil and energy stocks, I should say, for that matter, took a step back. But again, I think given the fluidity of the situation, it would be difficult for me to make a definite call on this at point. So again, we think it's very important to remain open-minded here as to the outcomes. Again, wouldn't be taking too aggressive a position either direction. I think the news remains quite fluid, but be open-minded. Again, the bond market telling a different picture from the equity market is important. Stay on your toes, and again, remain open-minded. We've been saying this all year long. It's the year of the trader. It's a trading year.
All right, we're still getting a lot of questions from people, rightly so, about this whole situation in Iran with the U.S. bombing the nuclear facilities, and of course, Israel doing the same. And so what does that mean? Is there really risk of this almost like a World War III scenario? Look, the base case has to be that this will de-escalate, but I think it is certainly something from a risk management perspective to be aware of, that we need to just be open to outcomes that might be sort of out of the norm. So when I look at that through the lens of risk management in the markets, which is really what I'm focusing on. It just means being a bit more balanced, being more diversified, not being just a few stocks that have a correlation of one. So is there a risk of the U.S. going in with troops in Iran? Look, I think the base case has to be, at this point, no. And I think that seems to be accepted by a lot of the experts, but I don't think we can take it completely off the table. So for certainties in life is typically difficult because there's really very few certainties in life, and this you just don't know. If you operate in the markets, there's uncertainty every single day. That's what we're doing. We're trying to probability weight things. So long story short, have we seen the worst? Is there more to come? Again, let's be open-minded. Let's adjust our portfolios to the point where we can live with the risk that we have. Raising cash, I guess. I think those are all reasonable things to do. So with that, hope it helped, and we'll see you soon.
If this video helped you, please make sure you subscribe to the channel, you give us a thumbs up like, and if you want to see this approach in action, you will want to join us in our Set the Market morning call, which happens at 9 o'clock Eastern Time, Monday through Thursday. Make sure you join us for that in the link down below. Again, subscribe to the channel. I'll see you in the next video.